Eric Muathe, Muathe.com, with this weekend's market analysis video for the weekend of July 15th and July 16th, 2017. Let's begin with the Nasdaq Weekly, and we can see now that after we found support on the weekly chart based on this RSI lows line, that now we can see that the market has gone on to make new all-time weekly closing highs. So we can see that we closed above the prior weekly closing high and the prior weekly closing high, which was also our level to watch for our breakout, was 6305.80. So this is a fresh breakout, and we definitely would like the market to stay above that level if the bulls are going to continue being in control. So it's a well-defined number, 6305.580. A failure to hold above that level might be a bearish signal, but if the markets can sustain levels above this price, which means that it is following through on its breakout, we might actually see higher prices. In other words, think of it as being somewhere here. So once we broke out, you can see that we had a chance of recording fresh highs, and that's exactly what happened. Otherwise, a failure to break out, for example, like here, where there was an attempt to break out that stalled. Now that failed breakout generally means we are running out of energy and can lead to a pullback. So it's important that the Nasdaq sustain its breakout by holding above the prior weekly closing high, and again that number 6305.80. The market needs to be above that level if we are going to see an improvement to current price levels. Failure to break out would be bearish. Now to go back to the 3-year weekly, this is a 2-year weekly. Let me show you a 3-year weekly. And we had seen that the Nasdaq had come back to test a prior resistance line. So this was resistance until we broke out. Once we broke out in 2017, of course the market's been trading higher. And so what we've been doing over the last couple of weeks is extending this line, and it gives us nice reflections as to where the market found support. Uniform action support, it bounced on the line for this weekly low, and over the last 2-3 weeks we bounced on this line for this most recent weekly closing low. So as long as the market is above this blue line, expect the market to be positive. Also, we can bring back the prior line, and we can conclude that as long as the market is holding also above this level, that the market should be sideways at worst, bullish at best. Let's take a look at the Nasdaq Daily. And on the Nasdaq Daily, just like we see here, or we saw on the weekly, we found support on this line. The market tagged that level, found support on the RSI lows line over the last couple of weeks, which is this lows here. And after that, we can see we've had a nice run. Now, the Nasdaq does need to clear the recent all-time confirmed weekly closing high. So we haven't closed above that. And let me give you that price. It is 6321.76. So the Nasdaq would have to clear that level if it is to record higher prices. Again, also here, failure to break out successfully might be a warning that the market is getting tired. Now keep in mind, on the monthly, we've been holding the view that as long as the Nasdaq, the Dow, and the S&P 500 are trading with their RSI above 69.1, expect the market to be sideways to bullish. Now keep in mind also for the Nasdaq, this month we are seeing a fresh breakout, and as long as it is breaking out successfully, and the level to watch there on the monthly is as long as the Nasdaq is trading above 9 or 619 8.52. So 6198.52. This market looks great. So that's a good breakout. It would be similar to a breakout like this one here. We had 1 month of rest. We broke out, and we haven't looked back since. So it's important for the Nasdaq, if the bulls are truly in control, that it stays above this level. As long as it is above this level, it is breaking out successfully. At some point down the road, should we see the market fail to hold above that level, a failed breakout would be similar again to this period here, where there was a breakout attempt here that failed, breakout attempt that failed, ultimately we drifted lower. So we have to hold above this price, otherwise failure to hold above 6198.52 might be a red flag. All told, if you take a look at the Nasdaq, go back, take a look at 5 years monthly, we can see that as long as the Nasdaq is holding above 69.1, as it did here, and I've been sharing this every weekend, as long as it is above 69.1, as it is doing right now, keep in mind this was good enough for 2 years of this run up, while the Nasdaq held above 69.1, as it is doing right now. So until the Nasdaq moves back below 69.1, this market is going to continue to be sideways, at worst bullish, at best pullbacks are going to be shallow, as long as the RSI on the monthly is above 69.1. If we take a look at the Dow, this is 4 years worth of weekly data, so 4 years worth of weekly data, and just want to show you that there was a line going back to 2013, which was resistance. Once we broke out above the line here in October, actually November of last year, this market has been trading well. We came and tested the line here for those lows, came close to the line and held for the lows right there. Now if we take a look at the 2-year weekly for the Dow, we can see that it continues trading with its weekly RSI above 69.1. As long as that's the case, expect the market on a week-to-week basis to be sideways to outright bullish. Take a look at the Dow daily. We can see we closed at a fresh daily closing high. In fact, it's day number 2, actually maybe even day number 3, since it broke out above the prior daily closing high, and the level we were watching there was 21528.99, which goes back to this daily closing high of last month. So this is a fresh breakout. The Dow does need to stay above that price if this breakout is truly to have some legs. For example, we can see a good example here. There was a breakout that took place. Once we broke out, we never looked back. So that's the kind of breakout you'd want to see. Failure to hold above this price might be a warning sign that the market might be getting tired, or that we are due for some type of a correction. But as long as we are holding above this price, we can say that the market is breaking out with a free chance to clear current highs and continue trading to fresh, uncharted territory. Now there's another way of explaining how the market's been trading throughout this period here. So I'm going to zoom in. This is 1 year daily. Let me zoom in. And here we have 3 months of daily data. So we can see the recent breakout right there. So we can say this is day number 2. And of course that price that we were watching there that the market finally cleared. To give you that number again is 21528.99, which goes back to this daily closing high. Now there was a prior daily closing high right there, and that price level was 21115.55, which goes back to this daily closing high. The market subsequently broke out above that level. As you can see, there was a breakout right there, and we went higher for a couple of weeks, came back to test it intraday, held, and now we are trading higher. So this breakout was tested and the market held. So it just makes sense that after finding support, so let me just show that line again. So this is the prior daily closing high. We broke out, came back and tested it and found support here, which is good action, and now we are seeing all-time daily closing highs. That's good action. Take a look at the daily. Go back to the 1-year daily. You can see RSI 50 support bounce for the lows here and here. And of course, once you show RSI 50 bounce, it tends to suggest that you're going to make new highs or test recent highs. Here we've tested and gone above recent highs. Now, don't forget that as we saw with the Nasdaq, the Dow also continues trading with its monthly RSI well above 69.1. In fact, it's been holding above 69.1 from about December of 2016, which might explain why we've been sideways at worst, bullish at best. Let's take a look at the S&P 500, and we can see here that there was a line of support that came in play. So this recent RSI lows line held. Good support there. And now we can see that we are breaking out above the prior weekly closing high. So this is a fresh all-time weekly closing high. The level that the S&P 500 needed to move above was 2439.07. So as long as it is trading above this price, this is a strong bullish market. Visually, it would be something similar to holding and breaking out here. Once we broke out, we never closed below that price on a weekly closing basis. So the bulls would need to engineer something similar to that, a breakout and don't look back. Otherwise, failure to hold above the prior weekly closing high, in other words, moving below this price, closing below this price on a weekly basis, will be a bearish sign. At the same time, we can see that the S&P 500 closed with its RSI above 69.1. As long as the weekly RSI is above 69.1, expect the market to be sideways at worst, bullish at best, even on a weekly time frame. If we take a look at the S&P 500 from a daily perspective, we see a fresh daily breakout to all-time daily closing highs. The level to watch here is 2453.46, which is the prior daily closing high from right there. So as long as we are breaking out, we need to hold above this price. Otherwise, failure to break out and hold above 2453.46, in other words, failure to hold above this price, might suggest that we are due for some type of a correction, maybe even a major high. And again, we can see good example here. There was a breakout attempt in August of last year. The market failed to hold above that daily closing high here. Subsequently, after multiple attempts, we rolled over. So we need to see a breakout here that is successful, similar to something like here where we broke out and did not look back. So that's what the bulls want to see, a breakout and a movement higher, because a failed breakout might suggest that we are due for some type of a move lower, and again, maybe even major highs. Of course, we know that the S&P 500 has its monthly RSI trading at 69.1 and above. So we've been trading above 69.1 for a while. So that's good action. Sideways to bullish is what you can expect, similar to this 2-year period. So 2 years of S&P 500, for the most part, staying above 69.1 during this period here, from 2013 all the way to 2015. So we're in a similar type of a market where we're going to be trending higher, sideways at worst, bullish at best, until we come back below 69.1. As you can see evidence of this on this chart, it's only after we cracked back below 69.1 here that we subsequently get these pullbacks. So until we move below 69.1, expect the market to be stable to bullish. Now, I've spent the most part of this video discussing why the market is bullish. Now let me go take a look at what could stall the market. Now the arguments on the bearish side are not very strong because the markets have yet to really see even one down day. In other words, You need to see a multiple down day to confirm that the charts are changing. Anyway, take a look at the S&P 500. You can say that there's a top side RSI resistance line that is coming in play. This could be a problem day to day. If the S&P 500 is unable to clear the RSI top line on the daily, that could be a problem. Might even begin some type of a pullback, maybe even major highs. We can also see that we are coming back to test the prior break of the highs. So we broke down, there's a shallow pullback of the highs there, and the market is coming back to test that level. If this is confirmed as resistance, chances are we might start seeing some type of a pullback. Like I said, not the strongest bearish arguments because the market has yet to see even one down day after the close of Friday. Take a look at the Nasdaq and we can see here potential for resistance based on this line, which was the break of the highs there. We came back to test it here, failed off those highs, and now we are trying to hold above that line. The more this is confirmed as resistance, the more we can expect some type of a pullback. Now that's the hourly for the Nasdaq. We take a look at the Dow hourly and we can see there are two lines. The first line goes to this break line here. Once we broke down, we get a warning high. So we take that information and draw a line right there. So the market did close exactly at that line. Confirmation of resistance here. If we are unable to move above that line, that might also begin some type of a slide. Short term, maybe major highs. Take a look also, there's another line going back to the break. And so the line looks something like that. So what this line does, it gives us this break line here. We break below the line of the movement right there. Try to move above it here. We are rejected off those hourly highs. Rejection here off those hourly highs. And now we are back to test that line there. So if those two lines confirm that the market is unable to move above that line, in other words, confirmation of resistance here, might begin some hour-to-hour pullback. And again, we can see that on the Dow 30-minute chart, there was a break here. So that line break brings us off those highs. So what we do is we extend that line. Should be something like that. And what this line gives us is rejection here of those highs, rejection here of those highs, and now we did touch that line towards the end of Friday's session and we seem to have found resistance. So hour to hour, 30-minute to 30-minute, the market could be at a point of rejection, but keep in mind these are not the strongest sell signals because the bigger time frames are still very strong. The monthly is strong, weekly is strong, the dailies are mostly strong. So it's gonna take more than just a couple of down points to kill this market. If this market is gonna see lower prices, you're gonna have to see more selling and strong selling. Right now, the bulls are firmly in control, especially as long as the monthly charts are still holding above 69.1. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. E-A-C-S